All right, so let's talk about interest. This is one of my favorite subjects. My perspective on this took a complete paradigm shift years and years ago, and it's something we've talked regularly about here on this channel. Throughout my entire life, interest rates were one of the most important factors when it came to borrowing. And in a way, it still is, but my perspectives have definitely shifted. And I want to enlighten you to that because once you start looking at things slightly differently yourself, you may end up finding that you too are concerning yourself less and less over time with the actual interest rates themselves, which allow many, many more opportunities to present themselves, along with additional tools that you maybe would have been unattracted to initially. So interest rates are only one half of the financial equation. What I find most borrowers are interested in is, what is the interest rate? And we saw this from the very moment that we started in the industry back in 2000, when we were licensed to provide wholesale residential mortgage loans. We would see that over the course of years, people would just keep coming back time and time again to refinance because the rates were continuing to come down. So the interest rates would drop 1/4% or 0.5% or an entire percent, and you would find borrowers that had only been in their loans for 24 months, 36 months, saying, I want to refinance. We've been conditioned to think about this. The banks are constantly pumping us for refinancing and to ask the question, what's the rate? It has been concluded that you should care less about the actual interest rates and more about the total interest costs. The worst case scenario as a borrower is to pay high interest loans off over long periods of time. Because the other half of this equation, when determining the overall cost of borrowing, in addition to the actual APR itself, which stands for annual percentage rate, is the length of time that it takes to pay the loan back, the term. So we're talking about both rate and term to determine exactly how expensive it will be to borrow that specific loan. Most people pay far less attention to the term than necessary, which is why many people look at various resources like hard money unfavorably. And that automatically removes that from their idea of an opportunity. So they miss out on it. Hard money happens to be one of the best ways of getting yourself into the real estate investing game that I've ever seen. And I want to share a personal story with you that took place 5 or 6 years ago. Because of our relationship with coaching members, from time to time, we discover opportunities for lending that a coaching member may want to take advantage of. And in this case, it was to us directly. As a business, we put it out there, cattle call, that we were looking for a $50,000 unsecured capital account, and it was going to come in the form of an installment loan. The installment loan was to be repaid over a period of 5 years, and it came at a 15% interest rate. Now, most people would shrug off a 15% interest rate as an opportunity, whereas we looked at it as a terrific way of building and growing the business. We had a way of investing that money where we knew it would increase sales by tens of thousands of dollars per year. In exchange, that 15% would end up costing us, had we not paid any principal back, a total of $7,500 each year. Now, knowing our repayment system, it was a bit of a surprise that Joe ended up being shocked that we repaid this loan in just 18 months. So over that 18-month period, because the balance was perpetually declining through the process of lump sum payments and paycheck parking, we ended up paying substantially less than that $7,500 per year average over that 18-month period. And when it was all said and done, Joe had been completely repaid, and we were looking at each other, and he kind of shrugged and said, I kind of expected more interest out of this. Certainly he wasn't surprised, I have to say, that we paid it off early, but I think he was a bit surprised at how little interest he was able to earn on that money because of how quickly we repaid. So what we've learned as borrowers is that by perpetually taking capital where we know we can reinvest under speculated results that will far exceed the cost of the money that we're borrowing, we can take high interest loans and repay them very, very quickly and only ultimately end up paying back extremely low dollar sums in interest. In fact, let me show you an example of this. I've got a folder here. This is a Chase folder, but this loan was actually my recent Jeep loan that we've talked about on this channel a couple of times in recent videos. We'll link those in the description below. The end of February, I bought a new Jeep. I chose to finance that Jeep for credit building reasons. The plan was to pay the Jeep off. Now, I got a great interest rate on the Jeep, a little north of 3%. Frankly, I don't pay that close of attention to interest rates because I do simply find them interesting. However, we've already paid that loan off in full. Over the course of holding that loan, we had a total finance charge of $88.13 the first month, a total finance charge of $42.76 the second month, and a total finance charge of $4.80 the final few weeks. So a total of under $150 in complete interest costs on an $18,500 loan size, $18,499.10 being the exact amount, and now that loan is completely paid in full. $150 is a small price to pay for the credit establishment that will now positively impact me for many years to come as a result of adding that account to my credit report. So there are many different benefits to considering paying higher interest rates, but paying them off over very, very brief periods. So make sure you check out our Real Estate Investing 101 training, as well as our new 100% financing video that was done with Kevin Amolsch through Pine Financial Group. They're a hard money lender here in Colorado, to understand a little bit more clearly why high interest rate loans paid off very quickly can serve you when you're developing your wealth as well. Oh, hey, I'm glad you made it. I wasn't actually sure if I was going to be drinking alone today. Hopefully you enjoyed that video as much as we're enjoying this drink together. If not, and you dropped one of those 2 or 3 dislikes, you can go ahead and piss off. Actually, I'm just kidding. Check out these other 2 videos instead. You might like them better. In fact, I'm sure you will. For those of you that liked the video, let us know. It lets the rest of the community know that it's great content, great ways of getting the upper hand on the banks. Make sure you become a subscriber too, because we always have contests. And if you want to be eligible for the contest, you got to be a subscriber.